folks. Rick Wedell here. I'm the Chief Investment Officer at RFG Advisory in Birmingham. We thought we'd come to you today with a little bit of a market update, let you know what's going on out there. S&P 500 right at 4677 at the last time I looked at it, which is right at the sort of all-time high for that particular index. We are in the middle of the second quarter earnings season. Third quarter earnings season. I got my months mixed up. And, you know, we always say that earnings drive stock prices, and that is certainly the case. You know, a lot of the positive momentum in stock prices over the past couple of weeks or so has been driven by just exactly how strong third quarter earnings have looked. We've had just over a quarter of the S&P 500 report, and so far about 84% of those companies have beaten on earnings. And about 75% of them have beaten on sales. And when I say beat, that means that the results have come in better than what analysts have sort of published as their expectations for what those companies were going to do for the quarter. Now, I should point out that it's not unusual for companies to beat. Any CFO who's worth his or her salt, is out there talking down numbers on a regular basis so that they can beat by a little bit every quarter. That's just the way the game is played. However, the percentage of companies that are beating is higher than average, which generally means it's a pretty good earnings season. So normally you see about 60% of companies in the S&P 500 beat earnings expectations. This quarter, we're obviously seeing that number close to 85%, which means it's a fairly good earnings season. And I would also comment that I would also comment that the pace of the earnings beats has been quite strong. So we've seen earnings on average, earnings growth for Q3 up about 34% year over year. That is the third highest on record if it holds going all the way back to 2010. So quite strong numbers there. Analysts had brought down their earnings estimates a little bit coming into the quarter on fears of what the Delta variant and inflation would do to companies, both top and bottom lines. And it's nice to see companies faring a little bit better than analysts had feared, which is the reason why you're seeing strength in the marketplace. I would also just comment that in the last 5 days, we've seen small and mid-cap companies sort of rip a lot faster than large-cap companies. That is a positive thing to see in the marketplace. You've seen the small cap or the Russell 2000, which is a small and mid-cap index, up about 4.75% over the past 5 trading days versus the S&P 500, which is up about 2.5%. So some nice outperformance there. You know, away from that, just what's going on in the news. We had a very, very small election cycle go through on November 2nd, a couple of governor's races, some things like that. But I would point out that the news for the Democrats in those election cycle wasn't super positive. The Republicans were able to flip the Virginia governorship, and the New Jersey governorship was a very, very, very tight down to the wire race, which is not something you normally see in New Jersey. This is generally about expected. It's kind of par for the course for the mid-cycle election, coming into a mid-cycle election. Biden's popularity rating is fairly low. The Democrats have not been able to pass any of the key points of their major agenda. And it really throws, I think, a little bit of question around what out of the Democratic agenda gets passed, as well as gives the Republicans, an even better shot at flipping the House and the Senate in the mid-cycle election that'll come up in 2022. The market, I would remind everybody, will obviously love that, because what does the market love more than anything? It loves gridlock. So that was a little bit of a positive development on the election front. With that, as always, if you have any questions, please feel free to reach out to myself or to your advisor. We look forward to talking to you again real soon, and I hope you have a wonderful week.
Thank you for tuning in. And if you're enjoying this content, please subscribe to our YouTube channel and click the bell to be notified when we post more.